Welcome back to my channel. In this video, I wanted to cover CVS. They announced their earnings before the market opened today, and the stock is trading up 5.26%. The market really liked what they saw, and I wanted to take a look at their earnings announcement, see how that's changed the fundamentals for the company, and take that information and update my valuation of CVS to see if it's currently discounted or being priced at a premium. The stock has been doing well in 2025. It's up 56%. That is a nice rise, especially in a year where a lot of stocks have really crashed and burned. When we look at the stock, it has a market cap of 88.64 billion and revenue is much higher at 376 billion. This is a retailer, a pharmaceutical company. They also have a health insurance paying business. And last, they provide health services. They have like urgent care health services at some of their locations. So they've really diversified away from just being a pure play retailer, pharmaceutical company, or pharmaceutical retailer to now having an insurance business and also providing healthcare services. They are profitable. PE is 16.78 and the forward PE is 11.44. So next year, they're really going to have a nice low PE, so that stock price can continue to rally. Analysts like the stock. They think it's a buy, and it's fairly priced. Taking a look at their revenue, it's been growing year after year. And looking at the quarterly results, in the most recent quarter, they just announced they grew 7.5%, which is really good growth. And they are accelerating their growth, which is very good to see. What's also good to see is they produced a really good amount of free cash flow, much higher than I expected. I'm actually going to have to increase the cash flow I expect in my cash forecast of CVS. The profitability of the company is there, and overall, it looked good. That's why the market is trading up the stock. Analysts, 16 of them cover this stock, and the stock has really run up. So maybe their price targets need to be updated, because right now it's showing that it's fairly priced. Analysts expect that this stock is going to have a PE of $5.96. I'll use that in my valuation using earnings per share. It's going to continue to grow. Earnings per share will grow at a nice clip, 16% next year, 15% the year after, and almost 18% in 2028. And revenue will continue to grow. So those really look good. Good, optimistic, long-term expectations for CVS. The desirability of the business will dictate what kind of discount I'm looking to have on a particular stock before I would invest in it. Stocks that operate in the green, the most desirable space, which is companies that have really strong competitive advantages, moats, that produce a lot of revenue growth, profits, and cash flow. I may not get a real sizable discount, but companies in the gray, I need a good discount in order to buy stock in those companies. And I put CVS in the gray, which is represented with a low moat company. Let's face it, retailers don't have big competitive advantages. And there's a variety of pharmaceutical companies out there, and there's health insurance payers as well. So there's plenty of competition. Now, CVS is proven to be able to grow, profit, and expand cash flows. So that's why they're in the gray. Having said that, in order for me to invest further in CVS, I have to see a substantial, compelling discount in the stock. Now let me go over the valuation of CVS that I've completed using a forecast of cash flows as well as looking at their earnings per share and driving at a value for the stock. First, the cash flow. My estimate is that they're going to do $7.5 billion in the next 12 months or better. And their run rate is higher than that, but I want to be conservative. And years 2, 3, and 4, I'm going to grow at 15%. And then terminal value, I'm going to grow at 4%. The discount rate I'm going to use is 8.5 because this is a rebound story. CVS has had trouble in the last couple of years, so I want a higher rate of return in my investment. When I discount this cash forecast by 8.5, I get to a net present value of $205 billion of value. I add cash and take away debt, to arrive at an equity value of $158 billion. Their current market cap, even after that 5% bump, is $88.5 billion. So there's a 44% discount on CVS stock. The stock has momentum, upward momentum, has a nice discount. The stock historically is traded much higher, so it could really revisit some higher prices. Earnings per share using a PE of 12, which is reasonable and probably conservative, considering that they're growing, they're expanding free cash flows. But let's go with 12. And a growth rate of 12, which is very reasonable. It gives us a discount of 12%. So when I blend the two, putting more weight in the free cash flow method, I get a blended discount of 36%. And on CVS, that is compelling. The stock is really working. It's one of the stocks that's worked best for me in 2025. Having said that, I'm a buyer of CVS. I'm going to buy shares of CVS and expand my position, taking it from being a small to mid-size position on my portfolio to making it a mid-size to large position in my portfolio. So that's my evaluation of CVS. It is a buy. It is a stock that's really performed well in 2025. And that's my analysis. If you like analysis like this, become a member of the channel. It'd be great to have you and be great to have you on member calls. You can have access to tools like this model that you're seeing and other things. Check out the details in the video description. And you can also visit my homepage on the YouTube channel for more information. Thank you for watching and good luck with your investments.